Today is Monday, November the 29th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Steve Freed, ADM Vice President of Grain Research, and Alan Bush, ADM Investor Services Senior Financial Economist. Steve, the grain markets were sharply lower on Friday. This morning, we're gaining a little ground back with the exception of corn, which is off a little. How should traders react to Friday's sharp sell-off?
I think each grain market is different. I think in the beans, probably shouldn't fade the fact that we were down Friday. We've got good South American weather, and our exports are running behind the pace to get to the USDA numbers. So December 9th, they could raise our carryout. The corn market, we just had an unbelievable rally late in the session because of options expirations. And I think that the down market today is trying to catch up to the fact that we kind of overreacted on the upside in corn on the options expiration. I think that we're getting at some levels long term that are probably good support for the corn market. Our export demand is not as good as we would like, but the ethanol demand is better. Don't look for much changes from the USDA on December 9th. The wheat market, we were all kind of screaming on Friday to buy the sell-off. I think that March wheat in Chicago and Kansas City are near value. Looking down the road, maybe some lower crops here next year and the possibility of higher Russian and European prices as their supplies decline.
Steve, you mentioned exports. Will corn, soybean, and wheat exports improve, or the U.S. 2021-22 carryout increase?
I think the market's very worried about our exports not meeting USDA numbers and the carryouts of all three, corn, beans, and wheat increasing. For the beans, we're just not seeing the China demand that we expected this time of year. And in January, Brazil will have beans cheaper to China than us. In the corn market, again, we're getting competition from Ukraine and Argentina. We haven't seen the Chinese buying that we were expecting. They continue to buy almost every feed grain, whether it's feed wheat or grain from other sources than us. And in the wheat market, we're still too high priced versus Europe. But eventually in January 1, I think the Russian prices go higher and that we're more competitive and we might see a pickup in demand. But for that December report, we might see lower exports and higher carryouts.
Lastly, Steve, managed funds have increased their net long positions to be the heaviest since May. Do you think this will continue, and why?
I think it will continue for two reasons. Number one is all the talk about inflation. I know the government looks at different numbers concerning inflation than what you see maybe at the gas pump or in the grocery stores. But I think inflation will continue to go higher. I don't think it's as transparency as what the government's trying to say. So I think the managed funds are trying to add to their portfolio as an inflation hedge by increasing their commodity positions. The number two, I think that weather is going to be an issue in 2022. Our guy continues to talk about a warm and dry summer next year, both here and in Russia.
Alan, the markets have seen a high level of volatility over the last several sessions.
Right.
What are the main potentially market-moving economic reports this week?
Okay, well, first of all, on Tuesday, we'll have the Consumer Confidence Index. That's expected to be 110.7. Then on Wednesday, we'll have the ISM, the Institute for Supply Management Index. That's guessed at 61.1. But then probably most important for the week are the employment numbers on Friday, with non-farm guessed at 543,000 and the unemployment rate expected to be 4.5%. Also, one more event on Tuesday or tomorrow, we'll have Fed Chair Powell speaking at 9 a.m. So all of those factors could have some market-moving implications.
Now, the dollar looks a little stronger here this morning. What's your outlook for the U.S. dollar index?
Well, the dollar index has been supported by interest rate differential expectations in that the Fed is likely to raise rates next year, maybe in June or July, while The European Central Bank now is backing away from its hawkishness. So that is the recipe for a stronger dollar and a weaker euro currency. And I think that trend will continue, not just today. I think the dollar index will continue to advance today and the euro currency lower, but also in the weeks ahead. So I think there could be a lot left to the upside in the dollar and a lot left to the downside in the euro currency.
And when you talk about the Fed, let's touch on that for a moment. What do you feel are the policy implications of Jerome Powell being reappointed as Fed Reserve Chairman?
Now, before he was reappointed, there was a possibility that Lael Brainerd could have been nominated. I believe there was a 60% probability of Powell being reappointed, 40% for Lael Brainerd. Lael Brainerd is considered to be a little more dovish than Powell currently is. So the implication is, with Powell, of course, being renominated, that it still looks like the Fed will be raising rates next year, as I said, maybe June or July. Under Brainerd, the probability could have been a bit later, maybe in September. So that seems to be the dominant and most important interest rate implication, is that rates are likely to be hiked probably next summer.
Yeah, whether it's midsummer or early fall, it looks inevitable.
Yes, there is at least one, maybe two rate hikes coming next year.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.